Hello friends, a very warm welcome to my channel. In this video, we are going to talk about a very well-known company called Tata Elxsi. So we have spoken about this company in the past in detail earlier. We have also compared this company with KPIT in the past. This is one of the most talked about stock in the IT sector among the investor community. The stock has given a dream run, and thereafter in the last couple of years it has been consolidating for a long period of time, and that's why it comes to the minds of the investors whether it's the right time to invest in the stock right now. So we'll talk about this in brief. If you're new to the channel, please do subscribe and hit the bell icon to get updates of all the new videos that I upload. And if you're not a part of our Telegram channel yet, do join today by clicking the link in the description so that you join the correct Telegram channel. Every day morning before the market opens, I share my view on the market. I also share a lot of portfolio allocation strategies which can increase your portfolio returns. So let's begin the analysis of Tata Elxsi. This will be the flow of our discussion. We'll talk about the business model of the company in brief. We look at the stock performance in the last few years. We look at the main financial parameters. We'll discuss why the stock has fallen in the last few years. What is the outlook of the management going forward? We look at the present valuations. We'll understand the risks of investing in this company and then form an overall view on the stock. So Tata Elxsi is a design-led technology company. It works with clients in different sectors. Majority of its revenue comes from the mobility sector or auto sector. The second comes from media and communication, and the third from the healthcare space. It's a well-integrated company which works right from design, development till execution stage, and it has business across the globe. If you look at the revenue distribution, from America it gets about 30%, Europe contributes almost 40% of the revenue, around 10% from the rest of the world, and around 20% from India. So earlier they were not concentrating much on the Indian subcontinent, but now they are also focusing on revenue from India. In terms of verticals, transportation or mobility constitutes about 55%, media and communication about 30%, healthcare about 10%, and others. So any slowdown in the auto sector or the healthcare sector or media sector can impact the revenue of the company, which has been happening in the recent past. If you look at the stock performance post-COVID, it gave a dream run. It crossed even 10,000 mark. But thereafter, due to the slowdown in the industry and not so great performance by the company in terms of numbers, the stock started consolidating, and thereafter it is still in the consolidation stage and it is trading around 7,400 right now. If you look at the revenue in the last 5 years, it has shown a steady uptrend from 1,800 crores in FY21 to almost 3,700 crores in the trailing 12 months. But if you see the speed of growth, it has reduced in the last couple of years. Profitability is impacted to a larger extent than revenue. It started off with 500 crores in FY21 to almost 1,000 crores in the trailing 12 months. So it has doubled in the last 4 to 5 years. But in the last couple of years, you see that the profit is flattish at around 1,050 crores. Margins have seen some pressure. Earlier at the peak, they reached about 31% in 22-23. And now the company is able to do an EBITDA margin of somewhere around 28% only, but the company feels that the worst is over in terms of the margins. It's a cash-rich company generating free cash flow, working capital is managed pretty well, and it has a cash balance of almost 1,300 crores on the balance sheet. This gives a hint that the company is open for inorganic acquisitions also, which can grow the company faster. As the numbers were not up to the mark earlier, at one point of time the institutions reduced the stake, but in the last couple of quarters you see that the FIIs, DIIs have started increasing stake in the company. Now, what led to the fall in the stock price from the 10,000 kind of a range? So there was a slight slowdown in the sales compared to the earlier years. The margins saw some pressure, as we've seen, from 31% to 28% now. At one point of time, the stock was getting a very high multiple of over 100, which saw a D-rating, and now it trades at somewhere around 50 times. So this is the one major reason for the fall in the stock price. Globally, especially in the US and Europe, the environment in terms of business was slow. Companies were deferring their deals. That's why not just this company, overall the IT sector was impacted in the recent past. What is the growth outlook of the management going forward? Earlier, management used to be more confident, giving higher 20-30% kind of a growth guidances. But if you hear the recent earnings call, the management is not talking in terms of numbers. They are just saying that even if they grow at double digit in the current year, they would be happy with their performance. So that is the change which we notice in the management's guidance. Although there have been some good deal wins by the company, they won a $50 million deal in the auto sector recently, which will last for the next 5-7 years. Then the revenue from Indian subcontinent grew by about 31%, from Japan and other emerging countries grew by 82%. So when they are seeing a slowdown in US and Europe, wisely the company is concentrating on other geographies. They won a deal with a big corporation called Nitec Japan. They have closed a deal with Scanday, which is into healthcare space. So overall the deal momentum looks okay, not very great, but in terms of growth, the company is not very confident of high growth in FY25 as well as FY26. When they were asked, they are not commenting on that. And they are saying it is too early to comment on the FY26 growth potential right now. So in terms of investors, we don't have much clarity about the near-term growth of this company. The same you can observe in the headcount of the company. The headcount has remained stable. In fact, it has declined a bit over the last few quarters. Utilization has also gone down. Its utilization is less than 70% and a lot of people are sitting on bench, which shows that the demand scenario in this industry or specifically this company has not been that great in the recent past. So historically, if you see the valuations of this company in the last 10 years, the average multiple given to this company was around 36 times. In the last 5 years, you can consider it to be around 55 times. And that's what you see on the chart as well. So in terms of the PE multiple, it has more or less reached a point wherein the downside or de-rating from this point looks limited, as this quality of business we cannot get at 20-30 times a multiple. If the company continues to underperform, there could be a risk of de-rating going forward. In terms of price to book, it appears to be expensive because there are no assets in this company. It's a services based company. Now, what are the risks of investing in this business? In terms of technology, they have to be up to date in all the sectors in which they operate, and there are newer companies, existing companies competing against them neck to neck. There could be industry slowdown in the auto sector, healthcare sector, media sector in which this company majorly operates, which could impact, in fact, it has been impacting this business in the recent past. And geography wise, if US witnesses a slowdown, if these kind of scenarios emerge, that could impact the business of this company. So now that you've understood the business model of the company in brief, you've looked at the growth prospects, you've looked at the financial parameters, you've understood the risks, valuations, what is our overall view on the stock? In terms of quality of business, it is a top-notch business of a Tata Group company. They are into niche services spread across globally into different verticals, so there is no question in the quality of the company at all. Now coming to the growth aspect, the company doesn't have good visibility in FY25 and 26. So even if there is an uptrend in the stock price, it would be gradual from these levels. From a valuations perspective, it is not too expensive considering the 5 years average valuations, and the downside looks limited. So if you're holding this stock from a very long time and you have not managed to sell at the upper levels of 10,000, as from these levels the downside is limited, so you can hold and continue to wait for the next rally. But if you're looking for a fresh entry, if you're looking for quick gains in the next few months, it would be difficult for this company. But if you are a long-term investor thinking from a 3 to 5 years perspective, then a gradual uptrend is possible, and it could be a good investment from your perspective if you have that kind of a patience for holding it for such a long term. And as the near-term results are not expected to be that strong, you will get enough time to accumulate this stock gradually. So that's about Tata Elxsi. I hope you like the crisp analysis. I've tried to cover all the important points in this brief video. If you like it, hit the like button and subscribe to the channel. If you want me to make videos on your favorite stocks, do mention the names in the comment section. Even this video we have picked up from the earlier comments. Do join our Telegram channel by clicking the link in the description button. Thank you for watching and have a wonderful day.